Hello, everyone. This is Kathy Lien with BKForex, and I would like to thank all of you for joining me in today's very special session. I'm going to actually close the chat box because I know that you don't want to see it. But if you have questions, type them in, and I will reopen the box at the end of my presentation, and I'll answer all of your questions once the prepared material is done. So feel free to type away as you have questions while I'm speaking. Okay, so today I'm going to be discussing a topic that is near and dear to me, which is basically trading news and the top 10 most tradable events in the FX market. I think that regardless of whether you consider yourself a fundamental trader or a technical trader, or whether you look at charts exclusively and only follow fundamentals periodically, that you will agree, for the most part, that news markets. I mean, it is the reason why the Australian dollar plunged overnight, because we had very weak Australian GDP numbers, and it's also the reason why we've seen, the dollar, the U.S. dollar, rise across the board. Basically, we have, aside from right now, when we just had the U.S. ISM non-manufacturing index, which surprised to the downside. Previously, when we had the ADP report, the dollar turned around and ended up rising against all of the major currencies. And the reason for that is because as much as you may be obsessing over charts, news moves markets, and we see that every single day. And they're tradable. They can be traded either as traded outright, or they can be used as a catalyst for your trade, or they can be used as a reason to not trade. For example, like perhaps Friday's non-farm payrolls report. Now, when it comes to, the FX market, we've got a lot of data that comes out on a day-to-day basis. This is not like the stock market, where data is only released once a quarter, and occasionally you get, some news. Basically, data is released from the major economies almost on a daily basis. So it's important to decipher what matters and what doesn't, and what has a bigger impact on the respective currency. And that's what, I'll attempt to demystify for you today, because along the same lines, this is a very busy trading week. And, I think that it's important to look at some of these top 10 most tradable events in FX. It's within the context of this week's reports. So, before I begin, I'd like to share with you this disclaimer, which, I didn't have the disclaimer up, I apologize. The disclaimer is the bottom, which says that trading Forex carries a high level of risk and may not be suitable for all investors. So, please make sure you are aware of those risks before you begin trading. So the top 10 most market moving pieces of data. Here's a list of them, from top to bottom, but we're going to go through each of them in more detail. So starting off with central bank meetings. If there's just one thing that you pay attention to when it comes to the FX market, it should be the central bank meeting. And the reason why it should be the central bank meeting is because when it comes to when it comes to the big trends in currencies, they are generally determined by where interest rates are headed. And it's the reason why the U.S. dollar is moving as much as it has been, because people are trying to figure out, when will the Federal Reserve begin its tapering program? Will it begin sooner, or will they begin later? All of that plays a role in how these currencies trade. So, I wanted to take a look at some examples, because we had a couple of central bank meetings this week, and we obviously have a couple more coming up this week. So, all right, I'll talk a little slower. So let's take a look at central bank meetings and how they could have been traded, how they are important this week, and how they could have been traded this week. So I'm going to go first off we're going to start by looking at the first central bank meeting that we had this week. which is the RBA rate decision. Now, if you remember, the RBA left interest rates unchanged when they met. So let's take a look at the price action in the currency. We're going to go to the 5-minute chart. And 1 second while I load this up. Okay, so on Monday night was when we had the RBA rate decision, Monday the 2nd, and the RBA made its announcement at 7:30 New York time. So, 10:30 New York time. So right here. Let me draw a horizontal line down here. Okay. So the RBA rate decision was at 10:30 on Monday night. And the RBA, if you remember, they left monetary policy completely unchanged, and they basically basically didn't change their statements at all. So as you can see from the price action in the Aussie dollar on this day, on the 5-minute candle, we had very little movement in the Australian dollar. But if you look beneath the hood and read through the statement, the RBA is still, dovish. They still leave the door open for the possibility of easing, so they do maintain an easing bias. And so that's important to remember, because when we have a scenario where people are trying to figure out, what trade to take, what they would end up doing is they would end up, waiting for other pieces of data to see whether or not it supports the dovish bias. Like today, we had a really weak Australian GDP numbers, and that was enough to take the Australian dollar to fresh lows. But taking a look at this rate decision itself, how could it have been traded? Well, one of the things that we have a whole variety of different ways to trade news. One of those ways is to wait for the 5-minute candle close, especially with central bank rate decisions, especially wait for the 15 minutes past. To wait for the 15 minutes after the rate decision happens, because you want to see not only what the central bank says initially, but also sometimes there's speeches afterwards. Sometimes there are there's accompanying comments that happens. So what you want to do is you want to wait 15 minutes before taking any type of trade. So what you do is we wait 15 minutes, 5, 10, 15, and what you want to do is you want to demarcate the high of the period and the low of the period after the news release. And so what I would do is I would place an order to buy at the high of the 5 pips above the high of the entire 15-minute window, and then an order to sell at the low of the entire 15-minute window. Now, with Australian data in particular, there's a very interesting characteristic of the Australian dollar. I'm not too sure whether, in the past, some of you have joined me in a presentation about how to trade the Australian dollar. And when I talked about how to trade the Australian dollar, it's a very unique characteristic of the Aussie, which is that you may have an initial movement off of an economic release, then you also have a retracement after data before Europe wakes up, sees the event risk, and actually engages in a much more significant move. So if you didn't know that, what you would do when trading the central bank rate decision, for example, is you would basically place an order, like I said, to buy the high of the 15-minute period. So we would be buying basically at 90.93 and selling at 90.65. And you can see that the buy would have been triggered. And, if you use a 25 pip stop, which is standard, or 25 pip stop, you've been stopped out. But the smarter thing to do is that if you had joined me in the previous sessions I did on how to trade the Aussie, and maybe I'll do it again next month, you would have remembered that, oftentimes after Australian data, the currency pair frequently, reverses and then powers higher in Europe. So what you would have done is maybe wait till the European, the first couple hours of Asia settles down and wait till the European market opens around 2 a.m. Put your order on to buy at the high, which we said was 90.95 about. And then you would have seen if you bought at 90.95, you would have basically bought, let me see again, the arrow going on here. All right, I want this thing. You would have bought around this region here. And that's when you would have gotten the real move of the day. And in the case of this rate decision, even though the RBA was dovish, investors were happy to see that the central bank didn't change its statement. All right, let's see if this Aussie dollar trick would have worked. Trying to get into my chart here. All right. Last night. Okay. So remember how I told you that oftentimes the Aussie dollar waits before seeing a significant move. So let's get rid of these lines. This was the GDP release. And what I want you to notice is, GDP was obviously weaker than expected. We obviously had a very significant sell-off in the Australian dollar. We had a significant sell-off in the Australian dollar. Currency pair consolidated. It did stand lower. But once again, I want you to notice that the big move, again, did not happen, or, the second push lower did not happen until the Asian trading session. So, while we were trading much lower than that level since then, if you waited to sell in Asia, you still would have gotten at least, Asia opened at 90.40, you still would have gotten at least, 20-25 pips on this trade. But I digress. We also had the BOC rate decision this morning, and it just happened not too long ago. So how would you be trading this? Because, right now we're still kind of in trade mode. So the BOC rate decision came out, and, I didn't really follow it because I've been talking to you. But basically the BOC said the downside risk to inflation seemed greater than before, which suggests that, they're probably thinking about easier monetary policy. Or at least, they've dropped their bias to ease. So 10 a.m., let's see what our 10 a.m. candle is. This is our 10 a.m. candle. So if we wait 15 minutes, 5, 10, 15, what you would do to trade the cash, place an order to buy here and place an order to sell here, and see which one triggers first. Because as you can see, sometimes the market cares about the data, and it just powers higher, or it reverses because, there's something going on. Like right now, you're seeing a little bit of dollar, because right now the U.S. non-manufacturing SNM is overshadowing everything else, and you're seeing a bit of dollar weakness as a result, or a reversal in the dollar rally as a result. Tomorrow, we have the ECB and the BOE rate decision. I think the best way to look at this is to look at what happened at the last ECB rate decision, which I believe was on the 7th. Let me just double check. I think it was on November 7th. Yeah, November 7th. All right, so let's go find November 7th in the euro. Zoom out a lot so it's easier, faster for me to scroll. I'm looking at the 5-minute chart, but we're counting, 3 5-minute candles, which would be the 15 minutes, or you can look at 15 minute chart. It's really up to you. All right. So we're in the euro last month. Let me zoom back in here so we get a good deep dive into here. So you remember the ECB cut interest rates, and the ECB cut interest rates basically by 25 basis points last month. Very, very big surprise. There's two ways you could have created this release. You could have just created the ECB rate cuts and basically marked the high 15 minutes before, marked the low 5, 10, 15 minutes later, and basically placed an order to sell the low. In this case, the low was at 133.52 for, 20, 30 pips, and, this thing went all the way down to 132.95, so obviously you would have hit your target. Now, that may not be the smartest thing to do because, and may not be the opportunity that you get to do because like this month when, or tomorrow, when the ECB, is not expected to change monetary policy, the real opportunity that you have is not until, ECB President Draghi speaks. So ECB President Draghi speaks he starts talking at 8:30, which I'm now moving my line to over here. So, generally speaking, you got to give him at least 30 minutes to. Sorry, I'm getting distracted by something, but it's wait at least 30 minutes after Draghi starts speaking before we get a good sense of what he was trying to say to us, because he delivers his prepared statement, which usually takes about 10, 15 minutes, and then 15 minutes maybe. And then he takes Q&A. Usually the most important questions that the market wants to know the answer to is asked in the very beginning. So by 9 o'clock, we usually have a really good sense of what the message that Draghi wants us to take away. So this is the 9 o'clock candle. So by 9 o'clock, we've got a pretty good sense of what Draghi wants to tell us. So what we would have done, what I would have done in this case, is we are once again using the 15-minute benchmark after 9. So, 5, 10, 15. So this would have been the low here. And, wrong. This would have been the low there, and this would have been the high. And basically, let me get my annotation in here. We would have gone long right here, and because the currency pair would have broken the high, going for plus, 25, 30 pips. So this event risk could have been traded two ways. Now, tomorrow, we do not expect the ECB to cut interest rates. So, in all likelihood, this will be a non-event. The initial decision will be a non-event. And we don't get our trade until after Draghi speaks. I think it may be worthwhile to look at one more. Let's see if we can get into the one before that. So the one before that, which is probably a better parallel, in October, I believe it was on October 3rd. Let me just triple check. October 2nd. Let's see if we can get into October 2nd. Might not be able to do it on my 5-minute chart. I have to go to the 15-minute chart. But let's give it a shot. All right. October 2nd. So this is actually the perfect parallel because 7:45 is when the central bank makes its interest rate decision. No changes were made, so obviously euro dollar does not move. So instead, what we have to do is we have to wait for Draghi to speak. So this was 7:45. 7:45 a.m. 8:30 is when Draghi starts speaking. This is when Draghi starts speaking. So 9 o'clock, we know what he's going to see, what he says. So 5, 10, 15, place our order to buy at the high of this candle. Place our order to sell at the low of this candle. Let's see how this trade would have worked out. So we've gone long here at 94, and Eurodollar's case extended to 07, so basically extended only about 10 pips. We'll see if we sat with this trade, what it would have done. So we sat with this trade. Let's get a smaller chart here. So we sat with this trade. We've gone long at the high, 90-something, and, if we had a 30-something pip stop, it would have been even 25 pip stop, it would have been at 75. It would have been at 65. And so 95, if we're going for, let's say, how much do you think we should go for? 25, which I think is a good amount. So our target would have been 20. We would have nursed this trade and eventually hit our profit target in Asia over here. So this one, unfortunately, would have taken a little bit of time, but we still would have hit our profit target in Asia. So this is the way you should be trading, in my opinion, tomorrow's release, which is that we want to wait until Draghi begins to speak, and then 9 o'clock will be our benchmark. Mark your 15 minutes after, high and low, and then take the trade afterwards. And with the Bank of England rate decision, the BOE rate decision should really be a non-event, because as we all know, I hope, if you've been trading FX for a little while, that when the central bank does not change monetary policy, they also do not release any statement. And when they don't release any statement, it ends up being more of a non-event for sterling than anything else. So the BOE rate decision really isn't all that tradable. So that is central bank meetings. Central bank minutes are also very important. I'm not going to share central bank minutes because the reaction is very similar to central bank meeting. Of course, the meeting is a little bit more important, but in many cases, like when we have the RBA, the minutes are also very significant. The employment report, on the other hand, is very interesting. And I think that is worth a little bit of a deep dive, because obviously we have the non-farm payrolls report coming out this Friday. So, a lot of people say trading non-farm payrolls is risky, and they are absolutely right. It's risky. But we could use the similar tricks of trade to trade non-farm payrolls. Let's take a look. So, the last non-farm payrolls report we had released, let me just pull it up. The exact date. November 8th. So let's do November 8th. So we're looking at the euro dollar right now, scrolling over to November 8th. All right, we're at November 8th. We're going to zoom in, get rid of this line that we don't need. So we're looking at November 8th. Let's find when non-farm payrolls was released. This is non-farm payrolls. And, okay, so non-farm payrolls, all right? So same premise, 5, 10, 15, place an order to sell at the low of this candle, and place an order to buy at the high of this candle. And, it takes a little while, but you can see our order to sell would be at 53. So it takes a while, nothing happens, and that's fine. Our order to sell gets triggered over here. That's not what I want. Let's get our annotation going. Our order to sell gets triggered over here. So we're selling at 53. You go for 25 pips. That's basically moved down to 28. And so you would have hit your profit target right around here after that last month's non-farm payrolls report. Let's look at one more. Get rid of this annotation. The one before that was October 22, because obviously that was the delayed one. So let's go to October 22. Scrolling to October 22. It's taking a little while. I apologize. We're almost there. 23, 22. Here we go. I bet you can just see right out which one is non-farm payrolls. This is obviously non-farm payrolls. 15 minutes, 5, 10, 15. High, place order buy here. Place order sell here. Also takes a little while. Our buy order is at 137.49. $137.49, and let's see what's going on here. So basically, our order gets triggered over here. So let's say we go for 25 pips. That basically puts our order 74 to exit. And let me get my annotation going on. And we would have, so if we are exiting at 74, we basically would have hit our TP right around here. So non-farm payrolls is due for release on Friday. What this strategy does is kind of lets you wait out the initial volatility. When we trade non-farm payrolls this Friday, this is what we are going to do. And actually, I'm thinking about holding a live trading session on Friday for non-farm payrolls. No promises yet because I've got to make sure that it's free on our calendar. If you're interested in participating in it, I'll give you a link later on just to express your interest, and then we'll send you an invitation at the time. Okay, so back to our slides. Let me get rid of this annotation thing. So employment. So that's how the employment report could have been traded. The fourth, in order of importance, in my opinion, first the central bank meeting, then the central bank minutes, then the employment report, and then retail sales reports are also very, very key. More so for some countries, less so for others, but either way, I think, quite important period. And for that reason, retail sales are also tradable in very much the same way. ISM and PMI reports. ISM and PMI reports are extremely, extremely important because they are, and the reason why they're so important, and I actually have a nice little report that you can download after this. This is BKForex Guide to Top 10 Most Tradable Events in the Forex Market. This is completely free and explains to you why the releases are important, key takeaways for Forex traders, kind of the time when all these events are released. So it's pretty detailed. But we go to ISM PMI surveys. Basically, the ISM PMI surveys are usually the first releases that you get from a country for that particular month. And it provides you with the most up-to-date look at how a country or economy is performing. And so, they're very tradable. We obviously had, the PMI services data for the UK this morning. We also had the ISM non-manufacturing data from the US this morning. Let's take a quick look at how some of these could have been traded. So let me get rid of this little thing here. So let's just go to right now. Let me see if we can find where. So it's kind of early in the U.S. Session. So if we followed our rule of waiting 15 minutes, let's see, 10 a.m., 5, 10, 15, we would probably just be in a new short euro dollar trade. But let's take a look at sterling, because that was the one, we've been many hours since the UK announcement. So 4:30 is this candle right over here. So, 4:30 is this candle over here. So we placed an order to buy at the high of this candle and sell at the high of this candle. So in this case, we did have our long trade triggered, and unfortunately we got stopped out. And, it will happen. No strategies work 100% of the time. Usually this technique works so much better with the employment reports as well as the central bank rate decisions. With the secondary, what it would be considered more secondary data, such as PMI, ISM numbers, you have to be much more patient, and the effectiveness may not be as high. But if you did this on PMI manufacturing, however, which was released on Monday at 4:30, that would have been a great trade. Let's look at Monday the 2nd, 4:30. So the reason why I say it's a great trade is because this allows you to take advantage of both the retracement as well as continuation. So if you remember, the UK manufacturing PMI number on Monday was very, very good. So if you just, said, okay, the data is good, let me buy sterling, it would have been terrible. But instead, using this technique, this data came out. What you would have done is you would have placed your order to buy this high and to sell at this low. So the low here is 77. And if you sold at this low, and let's say you went for 25 pips, so basically your target would have been 52, you would have hit your profit target down at this candle over here. So you would have actually, even though the data was good, because the price action didn't cooperate and you were kind of data agnostic, you placed your sell order anyway because we recognize that reversals can occur all the time, then you would actually have been taken into the short trade. And being that you take it into the short trade, that would actually have been the right trade of the day to take. So, ISM and PMI reports also very, very important. Confidence reports are important. Now, as we get, further and further down this list, the data tends to be less and less market moving, and have less of an immediate reaction than the first 2 or 3, like central bank rate decisions and employment reports. But, these are also market moving and potentially tradable. Confidence reports, housing data, GDP. Typically, GDP is not as market moving as we think it should be. Today's Australian GDP number is an exception, but because GDP is more of a backwards looking release and we already have the retail sales and the PMI reports out, it's generally not as market moving. And because it's not as market moving, it's number 8 on our list. But nonetheless, you have some outsized moves. You can have some outsized moves, such as today's Australian GDP number. Inflation, CPI, and PPI numbers, they used to be more important, but right now we live in a really low inflation environment, so they are far less important. But, if we scroll down here, we talk all about confidence surveys here. Why are they important, key takeaways, and some of the details. Inflation data, why is it important? It's much more important generally when we're in an environment of rising inflation, but right now we're in an environment of falling inflation, so it's less important. And then housing data, trade data. Trade data also, far less important these days. If you look at my list, we're going up to number 10 already. Trade is probably the least, in my opinion, market moving piece of data on the least market moving piece of data of the 10 on our list. But nonetheless, it is considered one of the more important ones compared to it's still considered a channel data, I think, compared to some of the other releases like consumer credit or the IBD Consumer Confidence Index, which are more tier 2 releases. But these are the most top and most market moving pieces of data on the calendar. And I think that these are very important for everyone to just kind of be aware of. If you want to download this guide, which is completely free, you can do that, and you can just copy this link into the chat box. And as I said, this is all free. And if we hold a ECB or non-farm payrolls live trading session tomorrow and Friday, we'll send, if you sign up for the guide, we'll send an email out to this list and let you know if that's happening. I just thought of it. It's a great idea, so I've got, of course, to make sure he's on board with it. If he is, then we may, consider doing that. But, that's basically what we are looking at potentially doing. So if we do it, or if we ever hold live training sessions for, that are open to the public, if you sign up for this free guide and you download it, you'll be on our mailing list, and we will let you know when that's happening. All right, so now I'd like to open up the floor to questions. I know that there are some questions already, so let me get to this box and see what the questions are. All right, starting from the top, what is the win rate of this strategy? It's quite high. I mean, this is a strategy that we actually trade at BKForex, and we give trading signals with SMS, these news trading signals with clear buy and sell levels to our subscribers. And so it's got like 80% plus accuracy the way that we trade it with proprietary stops and targets. For which countries are retail sales more important? If you look at this guide, we list out the retail sales reports, and it does show you which ones are more important. Our spread still increased to 15 minutes after. Usually spread starts to narrow once again 5 minutes after. So the 15 minutes is a nice little sweet spot. Any additional questions? We trade other news trading strategies. This is just one of them. Any other questions? In this variation that I showed you, it would be like a 1-to-1 or 1 to slightly, basically I would go for plus 25 pips, maybe minus 30 pips to stop. How will BOJ decision impact the current dollar-yen movement? BOJ rate decision is really not all that market moving these days, so I don't really think it's a effective tradable release. When you have back-to-back release to PMI, you usually wait for the latest one. If we're talking about the Eurozone specifically, what I would do is wait for the Eurozone Composite Index to come out. What percent are you fundamental and technical? It's hard to say percentage. My trades are always a huge interval. So we did not look at the 5 15-minute candle. We actually looked at a 5-minute candle, but we referenced this on a 15-minute. We looked at the levels 15 minutes after the data was released. Can you advise on what to look for in the current tapering issue? I'm still looking for tapering in 2014. But it really depends on how non-farm payroll is fair. The way I trade is that I always use fundamentals to determine the trade I want to get into, and technicals help me identify the entry and exits. So to relay this to the strategy that I taught you, the fundamental portion of it is identifying which data I want to take. The technical portion of it is using, the levels to determine my 2 entry orders. So, I think you always have to use a fusion of both. Any additional questions? If you have to trade only between 2 and 5 a.m., how will you approach? I would approach basically trading only Eurozone data. What do you think about the U.S. dollar index? I don't really trade the dollar index. I just trade the majors, so you can just focus on that. How can you detect if the Fed is tapering without announcing their intention? Well, the Fed's decisions are based upon data, right? So, they probably haven't made the decision up either. So basically it's all because of data. So another webinar is the stop and TP with 20 pips for the strategy. I actually never, I don't think I've showed you this strategy before, but generally speaking, we were looking at plus 2025, for our TP. And so your stop could be about the same, could be a little bit more lenient. I did not show you a very specific strategy today because, we keep these specific strategies for our subscribers, but I showed you how you could trade the data, more intelligently. And you can see yourself what the potential movements are. Tomorrow's reports, the euro dollar will be the one in play. I do look at COT reports, but, for separate reasons. This is the most intelligent way that I feel to trade the data, which is to avoid the initial spike. Okay, so let's wrap up here. I know that there's, webinars starting right after this, so I encourage you all to follow up on, what we do and download our guide. And if we do a live training session, which we will after I talk to Boris, I encourage you, we'll let you know. Thank you so much. And once again, let me just chat you this link that you can use to join our mailing list.